I definitely would have told myself hire slower, fire faster.
Hey, welcome back to the Real Slim Fady Show. I am Fady Hawatma, and today I'm joined with a very special guest, Michael Lee, Reconciled, and a few other companies. But Michael and I have known each other for a good amount of time, and have definitely grown a pretty good friendship, and now looking to really get to know each other more. So, Michael, welcome to the show.
Yeah, thanks for having me on.
Yeah, absolutely. So, I guess, really right off the bat, I know Reconciled is not the only thing you're doing. We'd love to kind of hear what you're up to now and the journey that you've been on.
Yeah, so Reconciled has been a business that I was fortunate to start about 7 years ago and been involved with, and built a really great team, really great management team that runs most of the day-to-day and can leads main operations for me and services for the customers. So that's a lot of me to kind of spend more time really thinking about the business itself and focusing on core areas of business growth. But I've also been able to dabble in other endeavors and help launch other companies. Back in 2019, I was able to help start a online HR services company called Humanly. So it's basically the same kind of model as Reconciled's online accounting services, but focus on the HR side for small business. And actually I don't run that business day to day. My co-founder, Laura Pillsbury, runs that. She's an HR professional, doing a great job. And then I also, before the pandemic, was able to work with my co-founder, Ali. We were able to launch what we now call PunchPay. It's an online fintech platform that does micro lending to small businesses, leveraging accounting data to do so. And that's been one of my core endeavors for the past couple of years, especially during the pandemic and post-pandemic, working on basically, instead of a service offering like accounting services, instead of working on a fintech offering. So that's been great. So it's given me a lot of exposure to a broader fundraising, experiences and fundraising in more the fintech and startup scene, and also some of the differences and challenges that poses versus doing core services in an accounting services company. So definitely learning a ton.
Yeah, to say you're a serial entrepreneur would be a very accurate term. So I'd love to hear kind of one of the biggest differences that you've seen. Obviously, both of us have run services companies, and both of us now are on the tech side as well. And so would love to hear from your perspective what the biggest difference that you saw running services versus running tech, and how did services actually help you, and how did services hurt you in the tech, getting the tech companies off the ground?
Yeah, that's a great question. So on the services side, as you know, services for most people running services companies, they tend to fall into, especially in the accounting arena, they fall into this space of required or necessary services. So it's actually really easy to sell in the sense of if you're in services and you're confident you can deliver the work because you will do the work yourself in the beginning, then it's really easy to sell. So it's actually easy to find customers. And you know that there's a ready audience for that service, whether it's accounting services, HR, management consulting, sales consulting, marketing, whatever it is, professional services and services in general, you can generally find a ready audience. It's very similar to consumer or at-home services like plumbers, electricians, contractors. There's a ready audience. People are buying that service all the time. So small businesses are buying accounting services all the time. The plus side is that there's a ready audience. It's not a new market that you're having to carve out. You're not having to explain, well, what is this that I offer? What's this new category? It exists, and people know about it. People need it, and generally have a budget or a price in mind in their budget that they're willing to spend. And as long as you can provide good service and you're not in an area where there's oversaturation of competition, you generally can grow a customer base, even if it's just for yourself, which most in the accounting profession, most in professional services, they don't grow that fast or that big. They get to 1, 2, 3 employees, and that's about average, right? And I think the average accounting firm has does $250,000 a year in revenues, right? So it's enough for the owner and maybe one or two staff accountants. So that service, it's easy to start, low cost of capital. You don't have to really fundraise. You don't really need outside capital. And you're really leveraging your relationships in your community, and it's easy to do. And when the challenge comes, and it's a challenge that I felt like we solved at Reconcile, and we continue to try to solve in a unique way, is how do you differentiate yourself so that you can scale? And then how do you scale where the scaling doesn't require the same one-for-one or like-for-like humans to be involved, right? So professional services requires a specific number of human beings, generally are the variable costs or the cost of goods sold, if you will, of the service.
Yeah.
And that continues to grow. And the problem with that model is that human beings are unpredictable and can be unpredictable. And there is a finite number of them, and they have a shelf life, right?
Yep.
And so human beings, of course, are valuable, and my employees are valuable, and I love working with human beings. And humans make up companies. They operate. They do the things that companies need to do. But professional services requires an abnormal amount of them as opposed to software companies or product companies.
Yep.
So that's the downside, is if you are trying to do that and scale, it requires a lot of human interaction. And in order to deliver the service itself, that requires a lot of human interaction. And that is hard to scale, and that tends to be unpredictable. Yeah. So those are some, both of the pluses and the minuses. So then when you get into the shift of starting a product company, whether it's software, fintech, whatever, or even building widgets that you sell online like an e-commerce store. The difference is that you can leverage the sale of the product, and it generally is exponential leverage compared to the number of humans you need involved. You know, great example is what you've done with Clockwork, where you haven't had to grow a number of people super fast compared to the sales numbers and the customer numbers you're able to go get, because you can sell and service a much larger pool of customers than you would if you had to actually do, financial planning modeling yourself on Excel, right? It's a very different model.
Yeah.
The downside, the risk side of a Clockwork or other product company is you generally have to raise capital to grow. So you have to raise a lot of capital. So the cost of capital, the cost of entry is there. It's gotten lower over time, but it's still there to make a really big splash and to make a name for yourself. And secondly, because you have to raise capital, there is a desire that you do need to grow. And you need to grow at a certain rate to return that cost of capital, whether that's debt capital or equity capital. You need to return it, so you have to grow. In professional service, there is a tolerance for slow growth. Actually, most of the professional services market is slow growth. 5% is pretty much common. 10% is fast growth, right? And anything above that is hyper. Like, oh, you're growing 25% a year. Whoa, you're crazy, In fintech or software companies, you're growing 5 or 10%. Are you even alive? Right now?
100%.
Exactly. If you're not doubling and tripling or growing 10% a month or a quarter, like, you're not even in the game. You're not even playing the real game. So
no one wants to talk to you.
No one wants to talk to you. You're not even really growing a product company. You're not really doing anything. So that's also a huge difference I see as well.
Yeah. I mean, you said a ton of things there that are super helpful, and I want to pick out a couple of them. With the services company, before I started Clockwork, running my outsourced CFO firm, it was extremely rewarding because I was working one-for-one with my clients, but hiring people was such a pain in the ass. I mean, it was such a pain in the ass. And then when you do hire people and your clients are used to working with you directly, scaling a services firm, I mean, there were so many times where I would attach a new client to one of my employees, and they were like, no, we're not going to do that. We signed up with you for you, and we want that level of service. And it was like, well, how the heck am I supposed to scale this if everyone just wants me? And that definitely was one of the biggest problems. But one of the biggest benefits was how easy it was to get business. I mean, I literally, I didn't have to try, right? Business would just land in your lap. And as long as you are not a shitty person, you know, I'm curious to hear your thoughts on this. There are so many shitty outsourced accounting, outsourced CFO, professional service people in the market that do not provide a good product, do not provide a good service, and, you know, really are preying on these companies that just don't know any better. I saw it very, very firsthand in Chicago, running my firm, and I looked at them and I'm like, man, these are all sharks. And they're literally preying on these companies. I'm curious to see if you're as adamant as I am about that. It was sad to see.
Well, I think that in any professional services market, there is that dynamic. There are great attorneys, and then there are shark attorneys. Yeah. There are great financial advisors, and there are people that are in it just to make money, and they're not really giving any financial advice whatsoever, or even good financial advice. So there are good stock traders, and there are bad ones, right? So it's the same thing in accounting. There are great accountants. There are terrible ones. There are great CFOs and financial planners and advisors. There are bad ones.
Yeah.
The interesting part of the accounting market is there's a shortage of, even if you add all the bad ones with the good ones in the supply, the demand outpaces the supply by exponential numbers.
Oh, yeah.
So the number of people who can actually even do work or even market themselves as I will do your bookkeeping is just in short supply.
Yeah.
And unfortunately, the generations after us aren't running to go study accounting and finance.
Yeah.
So the CPA profession isn't producing enough people, the CMA, you know, people majoring in accounting, MBAs, they're not producing enough people who want to do this work and want to learn the craft to do it well. Yeah. So there are even a number of well-intentioned people who want to do good work. They're just not competent enough yet, but they're out there marketing themselves. And because the entry point is so low, where anybody can hang their hat on Upwork, LinkedIn, Fiverr, all over the world, right? Yeah. So you're exactly right. I would say that there's a mix. It's a mixed bag, and it is up to the small business owner to vet. Unfortunately, most small business owners don't know how to vet. So,
they don't know. They don't know any better.
Yeah, they don't know any better. So they're going to go with the person who they trust ultimately, and on some of them, unfortunately, they're going to choose price over that sometimes, and that's a reality. And so they're then going to learn the hard way through the process of are they getting sound advice or not, and that's why you have to, you do want to vet and work with a number of advisors, a number of professionals, just to have a comparison and check references, and when possible, check ratings online when possible. And also see the result of the work. If this advisor is actually helping you with sound information and is actually helping you grow your business, okay, that's the results speak for themselves, right? If you're not getting anything out of it that's gone well, then the results speak for themselves. I mean, I've also made the mistake as an employer hiring professionals, right? I've hired bad bookkeepers, bad accountants, just because it's also hard as an employer to also vet, really vet, right?
Yeah.
Sometimes they're great at the actual work, they're bad at the customer service.
Yeah.
Right? Sometimes they're great at the customer service and they can be charming and sell you, but they literally can't tell a debit from a credit.
So they can't do the work.
They can't do the work. So that's been also hard too.
Yeah. I mean, that brings a super valuable point with the future of accounting, the future of accounting services, future of financial services. Obviously, that's why Clockwork exists, right? That's why I made Clockwork, because I knew that the future wasn't my consulting firm. The future was a technology that would enable consulting firms and enable, entrepreneurs to do what they need to do. How do you see, from your angle, right? Like you said, not everyone's running to get an accounting degree. How do you see the use of technology completely changing and transforming this industry where it's not that big of a problem if people aren't majoring in accounting, right? Because they get overworked. They get it's the most thankless job in a company is being an accountant. And even when if you go to a big public accounting, you're getting paid $50,000 a year, and you're working 80 hours a week during busy season, and you just get absolutely run over. So not only is it not well paying, it's extremely demoralizing for a lot of people, and that's just the way the industry's been.
Right.
And
there's a few things going on that have to happen at the same time. One, because the supply is not there, and because the demand continues to be there for the work, but the supply of people aren't there, and the people who really are excited and want to be in the profession, technology has to solve it. It's not just will it; it has to.
Exactly.
Because otherwise, it will just be a generation of, I would say, older millennials to retiring baby boomers who keep doing this until we're dead.
Yeah,
right? And then technology at some point catches up. Yeah. And there's individuals like yourself and myself who are trying to build technology to try to make it easier, better, faster, more automated. And then there's also the dynamic shift of the labor workforce globally, where you are now seeing a huge number, an exponential number of companies who would never have considered offshore labor doing that now, right? The outsourcing industry continues to grow, especially in the Philippines alone, by 10% a year, the global outsourcing. Philippines alone is growing 10% a year, and that's adding another 1 million people in the Philippines to do outsourcing. So, I mean, that's a huge, so we think about the number of the U.S. jobs, the people that are exiting the workforce in the U.S., that same number every year is being added in the Philippines to outsource globally.
Wow.
So that's
just the Philippines.
That's just the Philippines. I'm not talking about India where we, Reconciled that does a lot of outsourcing in South America.
Yeah, South America's huge as well.
Yeah. So if 1 million's being added every single year, that is a ton of people that is supplying the supply, and that will get better and better, right? Even the quality of that will get better and better. Yeah. So then there's software on the other side, and you're going to see, as the software does its job, and then hopefully finally the U.S. infrastructure of the banking core systems and the IRS systems actually catch up, and we actually minimize the use of checks at some point. When we start seeing those things level out, you'll eventually see that we're going to need less and less labor to do the same work. And, we're going to need less U.S. people doing glorified data entry. Yeah. And we're all of those individuals have to go upskill and go up market.
Oh, for sure. Yeah.
That is a reality. So I definitely see that. And, your company Clockwork is on the forefront of that and is part of that transformation that's happening. Yeah. And you're seeing it at all different levels, at the CFO level, all the way down to the data entry bookkeeping level.
Yeah. Yeah. And, the funniest thing is when I started Clockwork back in 2018, everyone was like, oh, so you're a cash flow forecasting tool. I'm like, no, we're not. It's so much more. It's a digital CFO. It's a full-blown FP&A suite. It's all these things. And, we're only, even though 2018 seems like 1 million years ago, it's not that long ago. But just in this last year, everyone's like, oh my gosh, you're in the FP&A suite, you're in the CFO suite of tools, future of work, future of finance. I'm like, there's all these terms now because the market's caught up. People are seeing what the future needs to look like. And, it's kind of this mad dash. And I was literally on a call earlier today with someone who, by the way, knew you. He was like, oh, do you know Michael Lee? I was like, how ironic. I have a conversation with him in an hour and a half. But he was explaining like, oh, in 6 to 9 months, cash flow forecasting is going to be even more important. I'm like, do you understand that everyone keeps talking about this impending recession? It's happening now, right? We don't have to look and wait till next year to actually get our shit in line. And for companies to get their shit in line, you have to do it now. I feel like there's so many people, and to use a super crude analogy, it's like so many people are the boiling frog. That analogy of the frog sits there and the water just boils around it. And I feel like that's how companies are right now. Everyone knows it's coming, but no one realizes that it's literally happening. It's not something that's just going to hit up. Wake up one morning and be like, holy shit, something's different.
Yeah, it's at the stage where pre-pandemic, it was the first movers, right? The first movers that were willing to do this and try these technologies out and use it. The pandemic accelerated that. Oh, yeah. And now you have you have a large chunk of companies that are outsourcing, both at, huge Fortune 500s down to small businesses and solopreneurs that are outsourcing everything on Upwork and on Fiverr in the Philippines and stuff. You're going to see it. It's not like you said, it's going to happen in the future. It's already happening. And then what you're going to see is in each year, you're going to see this huge gobble of the market, and especially in information type services, things that can be done online, digital marketing, financial planning, financial services, everything's going to be there. Tax preparation's already going there. At some point, you won't even need a US-based CPA to do most anything. You're just going to use an MBA or a CPA trained person in the Philippines or India to do most everything. And the Big Four are already doing a lot of that.
So they are.
If companies are allowing the Big Four to do that, to handle audits, to handle whatever, our little firms and little firms across the country either have to catch up, or I think what's happening too is you see a lot of companies being run by baby boomers. Most small businesses are still run by baby boomers, and they're retiring. They don't want to change. And so they're going to wait for the next owner to take over to do the transformation. So they're anticipating also in the next 5 to 10 years, the largest transfer of wealth to occur in U.S. history through these business owner assets that occur from business owner to there. I think unfortunately in the wake of that, the business owners who wait too long may not have an option to transfer their wealth or their asset, because there may not be the young buyer. Which young buyer wants to buy a old business that doesn't have technology implemented yet, right? They don't want to have that headache. So there's going to be some baby boomers that have started that technology transformation just to at least get it going for the new owner. But then there's going to be a lot of businesses that they're not going to have a lot of value in them by the time they're ready to be sold, because it's going to take too much work to transform them technologically, or their processes are stuck in an old school process. So there'll be some definitely a lot of consequences because of that. We're going to see. But you're right. That transformation's happening.
There's going to be just a massive shift. Even how I started Clockwork 5 years ago, it's not how companies can start right now. And then, that's just going to completely be different in the next 5 years. And then 5 years after that, just the scale at which things are changing is unmeasurable in my opinion. And to switch things a little lighter. I'd love to, obviously, with you having run and continue to run and starting successful companies, I would love to know what Michael Lee of now would tell the Michael Lee of 10 years ago. At the beginning of your entrepreneurial phase, 10, 15, 5, however many years ago, what is the number one thing that you would tell your younger self as an entrepreneur? Watch out for this and make sure you do this.
I definitely would have told myself, hire slower, fire faster. I had a hard time definitely early on I loved every person that I hired. I loved them, and I wanted to be their best friend and get to know them and care about them and create a culture where they felt cared. And I still want that. I still want that reality, but I also gave people way too much trust for their words, and didn't let them first show and prove could they do what they said they could in their interview, and almost give them almost a trial period or a probation period to show that. Because so I was really trusting, and then when people made mistakes, I really gave them multiple, many times to because I already invested in them, and I really had this belief, this sunk cost fallacy belief. It's a thing taught in finance where sunk costs is something that you should use to measure whether or not you continue on an investment or a project. And in finance, the sunk cost fallacy is no, you ignore that. You have to look at the future. It's gone. It's gone. Same thing with human beings, right? If you've invested in somebody and they just can't perform, that sunk cost fallacy is there. You have to decide, are they the right person still, and or not, and can they do the work that you hired them for? And so I think hire way slower than I was used to, and fire a lot faster. And of course, do it in a way that treats people with dignity and as human beings. Do it professionally, but it's okay. At the end of the day, it's okay. It's better for you, and it's better for them. It treats them with kindness that way. So I would say that. And secondly, I would also have, when I look back, I found the first part of my journey very lonely because I did it on my own. And I did a lot of it, most of it on my own, and I think I would have said to myself, go find some more either co-founders or some even wider group of people to help you in the beginning. And because it was a lot of hard work, and I put my spouse and my family through a lot of sacrifice. Those first few years, and they will have to sacrifice anytime, but I felt like it was more than they should have had to.
It could have been a little easier.
Yes, a little easier if I had a more involved co-founder at the time, or co-founders at the time. And then I think the other one is go find. I think it would have been helpful to have a few more sage mentors. Like older, guys that have retired or near to retirement, that if I look at their life, I go, I want to be like that. I wish I had that in my life at that time. And so I've really made it a point to look for those peers and for those advisors to be in my life now. But I should have done it sooner, way sooner.
No, I love that. It's funny with the hire slower and fire faster. My CEO coach, one time she told me this, she goes, no one ever wished they waited to fire someone. And, we always talk about, and I'm like, man, that is extremely profound, because, every single person that I've ever had the unfortunate, decision to terminate someone. And I never was like, man, I wish they were still here 6 months down the line or 4 months down the line. And, more often than not, it's like, holy shit, why didn't I do that sooner? Why didn't I fire them, 3 months ago or a month ago or a week ago? And so, I think I'm 100% alongside that. And I'm a solo founder as well. And being a solo founder of a tech company, I mean, holy shit, you want to talk about difficult, plus a bootstrapped, right? I bootstrapped Clockwork for 4 years. And, curious to hear your thoughts on bootstrapping the tech side versus venture backed on the tech side. I think bootstrapping is way overhyped. I think it's overrated. I would never in a million years ever bootstrap another company in my life. I don't care if I have 10 million in the bank. I'm not bootstrapping it. So curious to hear your perspective on that.
It's hard, I think the reality is, if you're playing in certain markets, you need capital, and you need a lot of capital, and you need to move fast. And that's the reality of certain markets. Now, there is the story of, the person that bootstrapped it and got to $1 billion on their own. And I go, that is so rare, it's ridiculous. It is just so rare.
And they're full of shit. When you actually look at the story,
exactly,
and you really uncover layer by layer, they didn't boot. If their family gave them $10 million,
it's like when Trump said, "My dad gave me a small loan of $1 million, and I turned it into a small loan." Okay, you are a self-made man. Yeah, sure,
that's exactly it.
And so it's the same thing. We're in a reality of a market where your competitors, especially in tech, there's certain markets where you just have to have capital, biotech, pharmaceuticals, but then in tech, you cannot move that fast without capital unless you are a rare breed where you can program, sell, find new customers, all this stuff, and you can get paying customers right out of the gate. Everybody wants paying customers out of the gate. We'd love that. The reality is, most people have a certain skill they're really great at, and most of the time it's not having capital that's just sitting in the bank. It's not all of them. So having capital to deploy and to move fast and hire fast and get those people early is smart. It's super smart. And the reality is, that's why funds exist. That's why capital's out there. Go get it when you can. Why wouldn't you? If you feel like you're a special case and you want to bootstrap and you want to get early paying customers, by all means, try it. It's just not the route for most people. It's just not, in my opinion.
And it's the credibility. It's the credibility piece, right? I can't tell you how many prospects that I met 2 years ago before we were VC backed, and they're like, I love your product. I love your team. I'm going to wait to see if you guys are around next year. I'm like, what the hell kind of shit is that? You're not even going to pay for the service. You know it's a premium product. You know it's a premium service. And they're like, yeah, we'll just wait. We've seen too many nightmare stories where companies will sign up and then the companies will literally go out of business. If the founders ran the company in a precarious way, there's all these things that have happened that if you don't have backing behind you or just that stamp of credibility, that faith of someone else's money,
right?
It's hard to, even if you can sell like a monster, that's a tough objection to overcome. If it's like, hey, you guys don't have a VC behind you, your competitor does. They may not be as good as you are now, but they could potentially get there in 6 months, in 9 months, in 12 months. It's a very, very tough thing to overcome.
Yeah, I totally agree, because you have competition, and unless there's a level playing field of no one's raising capital,
the
ones raising capital, all the ones that raise capital end up generally ahead.
Yeah.
So there's a rare case where it doesn't, but I don't want to be that rare case. I don't want to assume I'm that rare case.
There's a way to do it. There's a way to succeed, but there's no reason to stack the cards against yourself just by not fundraising.
Yeah.
There's literally no reason to. You think you're going to hold more equity? It doesn't. I'd rather have a smaller piece of a much bigger pie than a bigger piece of a smaller pie, having not fundraised. Awesome. Well, Michael, thank you so much. I'm sure we can talk for literally hours and hours on all this kinds of stuff. I'll make sure we have to make sure that we have you back on the show. But thank you again for joining the Real Slim Fady show. This has been awesome. We will catch you guys next time.
Great. Thanks, Fady.